Imagine walking into an auction house and watching people bid on an investment opportunity. What did they just buy? Not a Picasso, not vintage wine, not rare diamonds, a handbag, a used purse. And here's the wildest part. Over the past decades, Hermès Birkin bags have averaged 14.2% annual returns. That's better than the S&P 500 in multiple years. Some individual bags have appreciated over 500%. You read that right. A leather handbag has been a better investment than gold, stocks, and real estate for many investors. How does a purse become an asset class? Why are financial advisors, actual serious wealth managers, recommending Birkins as alternative investments? And is this genius or absolutely insane? Stick around, because the economics behind this are way more fascinating than you think. And by the end, you'll understand exactly how a French fashion house engineered one of the most brilliant investment vehicles in modern capitalism. The story starts in 1984 on an Air France flight from Paris to London. Actress and singer Jane Birkin, yes, that's a real person, not just a bag name, is sitting in first class next to Jean-Louis Dumas, the CEO of Hermès. Her bag spills open, content everywhere. She complains to this well-dressed gentleman next to her that she can't find a decent leather weekend bag with pockets. Dumas, being the CEO of one of the world's premier luxury houses, starts sketching. By the end of the flight, the Birkin bag concept is born. Function meets ultimate luxury. So what makes a Birkin special? Let's break it down. Each bag is handcrafted by a single artisan from start to finish. It takes 18 to 25 hours of work. The leathers are premium calfskin, ostrich, crocodile, alligator. The hardware is often palladium or gold-plated. Some versions use actual precious metals. Hermès has been around since 1837, originally making saddles and equestrian gear. This isn't some trendy startup brand. This is nearly 2 centuries of leather craftsmanship reputation. Prices start around $10,000 for a basic leather Birkin. Standard versions run $12,000 to $25,000. Exotic leathers, $30,000 to $100,000 plus. The rarest versions, like the Himalaya Birkin with diamond hardware, can hit $500,000. So if you want one, you just walk into Hermès and buy one, right? Wrong. You can't just buy a Birkin. There's no inventory sitting on shelves. You can't order one online. You can't call and reserve one. You have to play the game. And understanding that game is key to understanding why these bags appreciate like stocks. Here's where Hermès shows their genius. They've mastered something most luxury brands struggle with: true scarcity. Compare them to other luxury brands. You can walk into Louis Vuitton, Gucci, Prada anywhere in the world and buy something immediately. They want volume. They want sales. Hermès, they want mystique. They produce intentionally below demand. And for Birkin specifically, they've created an entire ecosystem that makes you earn the privilege of buying one. Here's how it works. You can't just request a Birkin. You need to build a purchase history with Hermès. You need a relationship with a sales associate and SA in the insider lingo. First, you buy other things. A scarf here for $00. A belt there, $900. Some shoes $1 to $00. Small leather goods $200. You're building your profile, showing you're a serious Hermès customer. You visit the store regularly. You chat with your SA. You build rapport. You express interest subtly, and perhaps one day, if the opportunity arose, being considered for a Birkin. Depending on the store and location, you might need to spend $10,000 to $50,000 on other items before you are even offered the chance to buy a Birkin. Yes, you read that right. You spend tens of thousands to earn the right to spend $10,000 more. And even then, you don't get to choose. The SA offers you what's available. Maybe it's not your preferred color. Maybe it's not your preferred size. You take what you're offered, or you risk going back to square one. Even if you're a regular customer, you're typically limited to 1 or 2 Birkins per year maximum. The quota system ensures scarcity remains absolute. And this is where the psychology gets fascinating. Humans want what they can't have. Tell someone they can't buy something, and suddenly they want it 10 times more. It is the same strategy as Supreme's limited drops or Rolex's waiting lists for certain watches. But Hermès has been doing this for decades at a much higher price point with perfect execution. Then add the celebrity effect. Victoria Beckham reportedly owns over 100 Birkins. Collectors like Jamie Kua have entire rooms dedicated to their Hermès collections. These images circulate on social media, creating aspirational demand. Meanwhile, global wealth is expanding. More millionaires and billionaires in China, the Middle East, tech industry, all wanting status symbols, all chasing the same limited supply of Birkins. Hermès could produce more. They have the resources, but they won't. Because the moment supply meets demand, the magic dies. The scarcity creates the value. And that's exactly why Birkins appreciate like assets rather than depreciating like normal consumer goods. Okay, let's talk actual numbers. Because this sounds insane until you see the data. From the early 2000s through the 2010s, Birkin bags averaged approximately 14.2% annual returns. Some studies by luxury investment firms like Knight Frank show certain years with even higher appreciation. Let's look at real examples. The Hermès Himalaya Birkin, made from Niloticus crocodile leather with diamond-encrusted hardware, sold at auction for over $380,000 in 2017. These bags originally sold for around $100,000 to $150,000. That's to 0.00300 appreciation. Even standard leather Birkins follow the pattern. Buy one retail for $10,000. A few years later, it's reselling for $15,000 to $20,000. That's 50100 return on investment. Rare exotic leathers in limited colors? Some have appreciated 300,500 over a decade. Now let's compare to traditional investments. S&P 500 historically averages about 10% annually, though varies significantly year to year. Gold averages around 7-8 over long periods, though highly volatile. Real estate varies by market, but often 5-10 in appreciating markets. Birkin bags of 14% plus in many years, with some individual pieces far exceeding that. So why does this actually work? 5 economic reasons. 1. Supply constraint. Hermès strictly limits production. Unlike stocks where companies can issue more shares or gold where more can be mined, Hermès controls supply absolutely. They could make more, but they choose not to. 2. Demand growth. The number of wealthy people globally is increasing, especially in emerging markets. More buyers chasing the same limited supply drives prices up. 3. Tangible luxury. Unlike stocks that sit in a portfolio, you can actually use and enjoy a Birkin while it appreciates. It's both functional and investment. Try wearing your gold bars to dinner. 4. Brand control. Hermès has never discounted. They've never had sales. They maintain absolute price integrity. This protects resale value because the brand itself doesn't undercut the secondary market. 5. Actual quality. These genuinely are exceptional products. A well-maintained Birkin can last 50+ years. They're not fast fashion disposable goods. The craftsmanship justifies treating them as durable assets. And here's what's changed in the last decade. The resale market has professionalized. Platforms like The RealReal, Fashionphile, and Vestiaire Collective have created legitimate secondary markets with authentication services, buyer protection, and global reach. This increases liquidity. 10 years ago, selling a Birkin meant finding a buyer yourself sketchy and slow. Now, you can list it on a reputable platform and sell within weeks, sometimes days, for desirable pieces. Some wealth management firms and alternative investment funds are literally buying Birkins as portfolio assets. This isn't eccentric rich people anymore. This is institutional money recognizing the return potential. So yes, it sounds absurd, but the numbers don't lie. For a certain class of investor with the capital to play, Birkin bags have genuinely functioned as appreciating assets. And this is a big, but that doesn't mean it's smart for everyone, or even most people. Okay, before you drain your savings account to chase that 14% return, let's talk about why this is way more complicated than it sounds. Problem number 1, entry barrier. You need serious capital. You're looking at $10,000 minimum for the bag itself, plus potentially $10,000 to $50,000 in other purchases just to be offered one. Most people don't have $20,000 to $60,000 in disposable cash to gamble on a handbag. Problem number 2, liquidity. Stocks sell in milliseconds. Gold converts to cash easily. A Birkin? You need to authenticate it, list it on platforms which take 15-30 commission, wait for a buyer, handle shipping. This takes weeks or months. If you need cash fast, you're stuck. Problem number 3, condition matters. Unlike gold bars that don't degrade or stocks that can't be scratched, Birkins are physical goods that can be damaged. A stain, excessive wear, broken hardware, these can destroy resale value. You need to store it properly, use it carefully, maintain it meticulously. Problem number 4, authentication risk. The counterfeit market for Birkins is massive and sophisticated. Even experts can be fooled. If you buy on the secondary market without proper authentication, you could spend $15,000 on a fake worth $50. The platforms help, but risk remains. Problem number 5, fashion is fickle. Hermès has maintained prestige for decades, but fashion trends can shift. What if younger generations decide Birkins are old money and uncool? What if sustainability concerns kill exotic leather demand? The entire value proposition could collapse. Problem number 6, opportunity cost. That $10,000 invested in an S&P 500 index fund would likely grow without requiring you to maintain a relationship with a sales associate, store the asset, insure it, or worry about condition. Passive investing beats active handbag hunting for most people. Problem number 7, tax treatment. When you sell a Birkin for profit, it's taxed as a collectible under U.S. tax law. That's a 28% capital gains rate. Compare that to long-term stock gains taxed at 15-20 for most people. You're giving more to the government. Problem number 8, insurance and storage. You need insurance. You need secure storage. These costs eat into returns. Unlike stocks sitting safely in a brokerage account, a physical asset requires ongoing maintenance expense. Here's the uncomfortable truth. This investment strategy only works if you're already wealthy. If you have disposable capital to tie up in luxury goods. If you can afford to wait years for returns. If you can handle the risk of it going wrong. If you're choosing between investing in a Birkin or maxing out your retirement account, choose the retirement account every single time. Problem number 9, ethical considerations. Exotic leathers mean crocodiles, alligators, ostriches. The environmental and ethical concerns are real. And there's something fundamentally dystopian about handbags as investment vehicles while wealth inequality reaches historic highs. So is it a scam? No, the returns are real. Is it smart for you? Probably not, unless you're in a very specific wealth bracket. But it is a fascinating case study in how luxury brands can engineer scarcity into asset appreciation. Here's what's really interesting. Birkins aren't alone. We're witnessing the rise of an entire alternative investment category. Rolex watches, especially models like the Daytona and Submariner, have appreciated significantly. Some vintage Rolexes have returned 500% plus over decades. Supreme box logo hoodies selling for thousands. Limited edition sneakers Jordan 1 second, Yeezus flipping for multiples of retail. Pokémon cards breaking auction records. A first edition Charizard selling for $420,000. Fine wine, blue chip art, classic cars. These have been alternative investments for decades, but the category is exploding. Why are wealthy people increasingly diversifying into these tangible luxury goods? 1. Inflation hedge. Physical goods can protect against currency devaluation better than cash. 2. Enjoyment factor. You can enjoy these assets while holding them. It's called consumption investment. You get utility plus appreciation. 3. Status signaling. These items show wealth and taste. You can't wear your stock portfolio to dinner. 4. Low market correlation. Luxury goods don't typically crash when the stock market does. They're driven by different factors, providing portfolio diversification. There's also a generational shift happening. Millennials and Gen Z grew up with sneaker culture, streetwear drops, and resale platforms. They see limited edition goods as assets in a way previous generations didn't. The wealth management industry even has a term for this now. Passion investments, things you're passionate about that also happen to appreciate. But here's the question economists and analysts are asking, is this sustainable or are we in a luxury goods bubble? Some warning signs that concern experts. If Hermès ever increases Birkin production significantly, the scarcity premium evaporates and values could crash. A major global recession could dry up luxury spending. When the ultra-wealthy feel poorer, they stop buying status symbols. If cultural values shift away from conspicuous consumption and toward minimalism or sustainability, demand for luxury goods could collapse. But zoom out further, and you see a bigger trend in an era of low interest rates historically, stock market volatility, and global uncertainty. Wealthy individuals are seeking returns anywhere they can find them. When bonds barely beat inflation and stocks feel risky, suddenly a 14% return on a handbag doesn't sound so crazy. We're witnessing the financialization of luxury. Goods that were once purely about status and enjoyment are now also about ROI and portfolio allocation. And Hermès didn't just stumble into this, they engineered it deliberately. So let's answer the question, are Birkin bags a better investment than gold? For most people, absolutely not. If you're a regular person trying to build wealth, you should be maxing out retirement accounts, investing in diversified index funds, building an emergency fund, maybe buying real estate. Handbags shouldn't be anywhere near your financial plan. The barriers to entry are too high, the liquidity too poor, the risks too significant, and the opportunity cost too great. For the wealthy, maybe as a tiny portfolio slice. If you have $500,000 plus in investable assets, already have a diversified portfolio, and genuinely love fashion, then sure, allocating 5-10 to luxury goods as alternative investments isn't insane. But here is the real answer. The perfect Birkin investor is someone who would buy the bag anyway. If you're buying it because you love it, it fits your lifestyle, you'll enjoy using it, and it happens to appreciate, that's a win-win. You get the utility plus the investment return. But buying a Birkin purely as an investment, keeping it in a closet in hopes it appreciates, never using it, that's putting all the downsides of physical assets with none of the enjoyment benefits. Just buy stocks. Let's give credit where it's due. What Hermès has accomplished is genuinely brilliant. They've created an entire asset class out of accessories. They've maintained scarcity and mystique for decades while competitors chase volume. They've built an ecosystem where their bags function as both product and investment, where scarcity is engineered into every level, where demand consistently outpaces supply. They've done this while maintaining brand heritage, craftsmanship quality, and cultural cachet across nearly 2 centuries. From a business strategy perspective, it's a masterclass. From an economic perspective, it's a fascinating case study in manufactured scarcity creating asset value. From a societal perspective, it's kind of insane. The fact that we're even having this conversation, that financial analysts are seriously discussing handbag ROI, that wealth managers recommend Birkins alongside bonds tells you something about modern capitalism. It shows how concentrated wealth has become, that there's a market for $100,000 handbags as investments. It shows how alternative assets are filling the void left by low returns on traditional investments. A Birkin is simultaneously a beautiful object, a status symbol, a legitimate investment vehicle, and a symbol of extreme wealth inequality. All of that can be true at once. So the next time you see someone carrying a Birkin, remember, that might not just be a fashion statement. That might be an alternative asset allocation strategy. That might be outperforming their stock portfolio. The real question isn't whether Birkins beat gold. They often have, at least historically. The real question is, what does it say about our economy that they do? And that's something worth thinking about, whether you can afford a Birkin or not.